What's going on, traders? Hope everybody's having a great start to the month. Thank you so much for joining me in this edition of the market update and analysis. My name is Shark. We're going to be going through some macro levels here on the E-mini S&P futures as well as the NASDAQ 100. New month start here, so we're going to take a look at where we are from that monthly perspective, going to weekly and daily. Then we'll go ahead and take a look at some of the other data points I like to look at every single week that helps me formulate a game plan on the market. Alright, with that being said, reminder that this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. Alright, so starting off here with the E-mini S&P futures, and I think the first thing that I want to point out here is, we're finally seeing that selling coming in. We've been watching this oversold reading on the monthly chart for quite a while. Monthly time frames, of course, take a lot longer to play out, but now finally here starting to roll over and get out of that overbought condition. Still overbought, but now we're seeing that cooling obviously in the market, and we are down underneath the monthly 9-period moving average, which is sitting at 66.40. So that is worth noting as well. So let's take a look at a couple of things, because now if we zoom out, kind of what is my projection here? Now we are obviously in a weekly downtrend, a daily downtrend, and really trying to form a monthly downtrend. Not quite there yet, but where would the bulls need to defend? And this is really reminding me a lot of what was going on last April with the tariff tantrum and the big sell-off we had seen at that point. And if you recall back in our videos, what were we really looking? What really happened on this giant move down, right? Well, really all we did was put in a monthly, right, higher low. We've got our swing low here, higher low here, and the higher low here. So can we afford, can all this blood and all this selling take place? And from the monthly perspective, are we fine? Yes, absolutely. And I still am looking for more downside. We'll go over some more of that on the weekly chart, but where is that monthly low or high? If we were to lock one in, excuse me, not a higher low, where would we lock that in? Right here. So this is what I'm looking for. I want to see if we have some continuation further down coming into this area. You can kind of draw a little bit of a supply demand zone right here if you would like, but the start of it right at that 61, 65 area is where I'm going to start to be interested in deploying some a longer term capital right here. Now, of course, in fact, if we break underneath the bottom, I mean, you can take that supply zone right here to the tops of the bodies as well, demand zone, excuse me, if you'd like to, but what I'm really looking for is for this to hold. If we come down here, this would put in that higher low, and from there then we can work on pushing back up, right? So a lot of people are singing doom and gloom, and maybe this time is different, but from the monthly perspective we are still okay. And now we'll sing a different song if when we get down into this zone we start seeing a displacement, a break under. Okay, well then we're gonna be in a much different situation, but for right now the monthly is still being defended as bullish. Okay, and today we had the month's close. A lot of pension funds, hedge funds, this quarter close as well. A lot of rebalancing in the market taking place, and that's why we're seeing, aside from some of the, I guess, positive geopolitical news, you never can really tell what's going on. One day we're talking to Iran, and one day we're not. One day the war is going to end, one day it isn't. So, I'm not so sure what's going on that front. However, a lot of the buying really was just because of those hedge funds and pension plans rebalancing at quarter's end. Okay, so with that said, we've got the low here from March right around the 63.70 area. It looks like we swept just a little bit below it and pretty much matching the equal lows from back here in the month of September, right? And that's all that really happened, as you can see. Whoops. as you can see, boom, boom, right? Okay, equal lows, and now we've got a nice counter trend rally pushing us up higher. So what I will say though here, the bulls did do something that was a first step in the right direction, closing over the 65.17, 65.15. That is a little constructive. Now we have recaptured the lows from the month of November, 65.70, 65.68 right there. So this is my demand zone. If the bulls can maintain a base over this, okay, then we could potentially talking about some more upside. I'd also watch out for a 50% retracement of this monthly candle before potentially heading back down. But overall, even if we just hang out here, we could really just be setting up in some type of redistribution, and we can get a bear flag, and then maybe we do see that next leg down. Of course, now the target to really create that new lower low is going to be under that 63.70. So we're not there yet, but it could be potentially setting up. Other than that, if they are able to hold, and the bulls do want to get over the 50% retracement of the month of March's candle, then we can see about trading up into the 67, 66, 68, 18, 68, 20 there. Potential short down, right? Because we had that multi-month balance that we were watching forever where we just really did not go anywhere. And we finally, obviously, had broken that structure, displaced to the downside. So to me, retesting this area is another potentiality. And if I am bearish or wasn't short already coming up into this zone, I'd be looking for potential sells. However, if bulls are able to get over that 6800, 6820, then we'll be back up in this area and we'll have totally neutralized the trend, obviously, and then we'll start talking about new all-time highs once again. However, we are not there yet. All right, so let's go into a weekly chart and start to get a little bit more granular here. Okay. So here we are, putting in that bounce. Now here we're on the weekly. Now the weekly 9, I have to say 66.83, so that's still about 70 points away. The weekly 20, 67.31, which we got pretty close to. And actually, what was the high today? 66.53. So that's interesting. We did get a little bit above, but then we did see some late day selling come into the market, and so we were unable to actually find acceptance over the weekly 20. So clearly we are still in a weekly downtrend. You can certainly get that trend line if you would like. The angle of the sell is a little bit aggressive, so we can watch out for potential falling wedge setups, but we're not quite there yet. But you can definitely, I could see that argument as well. We are holding, though, the weekly 50 sitting at 65.31, so that is good for the bulls. But as you can see here, ADX is definitely in a bear mode right now. So all this is, and it was a huge rally. If we want to, let's see how many points this is. Let's do a little line there to about 275 points. Okay, and this makes sense too. Huge rally. Markets just obviously just don't go straight down. They move in those ones and twos. So it's pretty logical here that we are attempting to put in overall just a lower high here in the overall trend. Nothing really convinces me yet that, hey, we are out of the water. I'd really love to see if we can get down and lock in that monthly higher low, and then that would be really nice for me. But was I interested in making any purchases down here at the 63.70s? No, not really, but there certainly will be other opportunities, and no one needs to exactly hit the bottom of any market. So is this the start of something? Well, we'll see. They are definitely trying their hardest, but certainly as long as they stay below this balanced price range breakdown, the bulls are still vulnerable overall. All right, the other thing I want to mention here, okay, we are getting a little oversold on our overbought oversold indicator, Shark Momo here. And what is our reading? -9, so a little bit of relief, but watch out here. Same thing happened in April. We got oversold in April, and then it rallied. So I don't see any change here in the actual momentum yet, but we are still oversold, and watch to see if this starts to turn green and curl up as well. So that it definitely is worth watching. All right, let's go ahead and take a look at some of the damage on the daily chart. Again here, okay, oversold conditions starting to come out, trying its hardest. And look at this, we did close over the daily 9, so that is definitely interesting and encouraging for the bulls at 65.75 and 65.80 right there, you can see. But we do have the 20 at 66.49, and so that's about what is this, another 45 points or something away from the 20 as well. So I'd keep an eye on that daily 20 if we do come up and want to retest that area for potential shorts as well. But just from the structural standpoint, this is the spot that I'm watching and really the most important to me right now. Even if we bounce up, I mean, you could kind of almost make a case for potential inverted cup and handle here. You can see right like this. Oh, it's not the one I wanted to do. Up like that. That was your handle. This kind of right here was your neckline. And this is the coffee falling out of the cup there. So we did kind of have that set up as well. So again, as long as we stay underneath that, still there's some issues. I go watch these daily lows here from the beginning of October and middle of November towards the end of November. Definitely some spots here that we that's pretty much looks like where we stopped on the day before we did see some selling. Looks like we wicked just a little bit above and came back under. So that is interesting as well. And I think that might be the first step besides the bulls holding over this 68 area for them to have that potentiality to move back up higher once again. Okay, so that's pretty much everything I've got here for ES and the monthly and weekly and daily chart. Let's jump over to the NASDAQ here and take a look at what that looks like on the monthly. I'm sure it is pretty close to the same scenario overall for NQ. Okay, jumping over here on the monthly chart once again. All right, this is our zone for that potential higher low to be put in on the monthly time frame. Didn't quite get into it, got close, but again, same thing, pretty much matched those lows from September and then saw a bounce overall. So let's see if the bulls are able to hold over this 23,450. That would be constructive, even more constructive over 24,120, which we did peak up over a little bit today, but looks like we are just only about 20 points below, or 20 30 points below. Not that bad. So they can easily get right back above this. And I do think Trump is speaking this evening at some point, so who knows, we might see some volatility in the Globex session here overnight as he's talking, so that will be interesting as well. Same situation though with the monthly balance breakdown, not quite as clean as it was looking on the SPOOs, but that makes sense with the ATR, of course, of NQ, a bit more sporadic, so to speak. And those wicks, of course, can be very intense and can catch a lot of people off guards. But here we are, green day, starting off everything, and let's see what happens if we get a couple of daily closes under or over that 24,120. That's going to be really the tell here overall. All right, let's take a look here on the weekly chart. Okay, same thing, still under the 9 and the 20 on the weekly chart. So nothing really there that's saying too much unless we start to get back over that. It's still in a bit of a trouble zone, and obviously, clearly, still in a downtrend being put in overall. But nice move today, definitely a nice move, can't not deny that. And you can see we're just hanging out right at that area, so we'll see what happens there as the week progresses. Okay, and then the other thing, let's go over to the, all right, nice and stronger push here on NQ, at least on the daily coming out. We are over that daily 9, still not over the daily 20 at 24 at 330 and the 50 200. We are still under with quite a ways to go. It looks like the daily 200 EMA is, I mean, this looks like 500 something points away. So still, overall here on the daily bearish, but got to give them some props here for getting over the daily 9 at that basically 2400, 2435 as it stands right now. But as far as I'm concerned, this is just counter trend rally stuff, and it's not anything that is telling me that the downside is over. And remember, of course, we just made a lower low. We're gonna have to make a lower high to continue that trend, and until proven otherwise. All right, so that's all I've got here for the NASDAQ. This is what I'll be watching, and let's see how they end up closing out the week. All right, so moving right along here, going to get into some of our other data points I like looking at, and let's start off. Okay, yeah, here we are. Okay, let's start off with how many stocks are trading within the SPX or ES or the S&P, the SPY ETF, over their 50-period moving average. Okay, we were down in the gutter there, about 20%, only 20% of the stocks, and you can see right around here is pretty much where we ended up hanging out. I didn't get to that quite as low as I wanted for that real contrarian signal for a potential, at least, relief rally down in the 15s to 10s. So I was really looking to see if this came down just a little bit. And what did it come down to? Yeah, 18%. So it needed to fall about 8% more or so, but it did not. We're still vulnerable, of course, under the 50% mark, which is pretty much what we want to see for a bull market, or a bull trend, I should say. Still under 30% here, so watch out that this just doesn't turn into a bear flag and then come back over. But I have a feeling this probably needs to come up a little bit more before it can continue back down. The amount of stocks trading under the 200-period moving average, not one I watch quite as much because it is slower, but we are getting closer now to, what were we down here, to 42%. Now we're at 48%. Not bad. Let's see if they can get this over the zero line, over that 50% for some constructive activity for the bulls. New highs versus new lows. Okay, now a spike up again, and one thing that I kept noticing on this when I was looking at the new highs versus new lows, I mean, we only got readings down in the negative 150s, 155s. So look how it was in April. Negative 1,000. Now, this was a pretty extreme outlier. However, this really held up a lot stronger than I kind of honestly was anticipating. So that's interesting. We're at minus 23 now. We got to get over that zero line. But this was one sign for the bulls, I would say, that I was looking at. I was thinking, maybe we would be down all the way here, like how we were, negative 260, negative 200. You'd think you'd be seeing readings like that, but it looks like really the reading we got was from back here, and was this the start of August, which was negative 185. We got kind of close to that within 20 bips or so. But either way, holding up well here. Got to give that one to the bulls. Let's see if they can get over the zero line. Okay, let's move along here. Just want to look at the junk bonds in isolation. And let's see where SPY is bouncing on a nice trend line here. And there's no divergence for me. This looks good. And let me just extend that. But no divergence here. We can still clearly make a case, though, as long as it stays under this area, right? We've got our kind of a swing high here, lower double top, lower high. I mean, anything still under 80, under that 79, 80, still just a lower high being put in. So no divergence is there on the junk bonds, giving me any clues for hope on the bulls. Okay, bonds still having some serious issues here. and just towards the lows of their range. So you can see the 30-year or 20 to 30-year bond trying to get over that 86. It might as well just call it 87. Couldn't do it. No good. But bonds look like they are still pretty much in trouble there, which means, of course, our yields, which have really been a huge downturn on the market, huge headwind, on the market. We were up over 4.4, but now cooling off just a little bit. And let's see what happens. Really, we need under 4.2. Okay, that would be a lot more constructive for the market. And until that happens, this is still very cautious. It could come down to 4.2. It could even come down here to this 4.3 and lock in a higher low and then just continue to move up. I was watching this move on the dollar. Okay, right around this 150 area. Had equal highs there. Did a little sweep back down. Okay, so that's good. This is one thing that was also putting some headwinds on the market, and really actually pretty decent move there on the dollar all the way back down. And it really probably as it stands now, we're just stuck in a balanced price range overall. So it's going to either be that we get underneath this 99.40, 99.35, or up and over the 102.60 for either a real break of this structure in this balanced price range. So until then, nothing really in the dollar. It can just go back and forth here. But of course, we would rather, if you're bullish on the market at least, you'd rather see that dollar break underneath and get back down towards these lows and then travel down back into the low 90s. And that will also definitely put some pressure off of the metals. And the TNX also too has been really messing with the metals trade, so that needs to back off as well. And then I believe the gold and silver will continue on their merry way, and that's been a tough trade overall. So let's keep it moving along here. Let's look at the credit spreads, bond ratios. Okay, trying to break LQD here, corporate bonds, trying to break out of a little downtrend. Here's a little positive note for the bulls. I will give them this. Credit spreads getting a little bit better here. Okay, we're still over the 50, but it's still saying risk off. So this is still in the bear camp. This is still in the bear camp. Bear ratios, yeah, all still in the bearish camp. And definitely looking like the TNX wants to go higher. These could come into the 50 as well and then just continue in their upward direction, pushing up TNX. But so risk off. I mean, these are all still saying bearish here for our credit spreads and bond ratios. Okay, moving along. All right, we already looked at the dollar. Let's take just a look at gold now. Okay, this was that huge spot, and just another view on the dollar. Huge spot here where it has not been able to break out of that. So, and on the daily, but actually it's not even overbought. So, I mean, it got a little overbought here, but this is cooling off, still above the zero line. So we'll see what happens, but this area is just huge if this breaks out. Over this area, over all these equal highs, we'll probably see the dollar up at 102 again. That would be my next thought coming into this last daily swing high. All right, so gold actually did a really nice retest here, and you can kind of see coming into these highs, did a sweep right into the 200, and boom. Okay, now we're back over the 920. I'd really like to see it back over this 5120 area, 5116. And then we can start to talking about attacking those all-time highs again. But getting constructive here on gold back over the 9 and 20. And, you know, it's really the yields that have been messing with gold and silver. But, you know, I'm kind of actually surprised that, I mean, it's I don't want to say it's useless. I mean, without the yields cooperating, it is very hard. And no matter if, you know, I was thinking with the war too and all this uncertainty, they also would be pushing the dollar up just kind of as a safety trade. But it really didn't happen. The yields were moving up too fast, too strong, really just wrecked it. So that really didn't make a difference. But I was kind of thinking, oh, well, even if we went into the, even with the war going on, even with the yields going up, it wouldn't matter, that people would still be buying this for that safety trade. But that didn't play out. But we got really overbought here, came into the daily 200, boom, back over the 920. Okay, looking good. Let's see if we can get back over this area though. Once that happens, yeah, then we can look for this local swing high and then our back to our all-time highs. So let's see what happens there. Let's take a look at the put call ratio, because I was looking at this. We didn't. Oh, okay. Oh, this is interesting. Oh, this is interesting here. Now we're seeing readings of 1. We're getting a little frothy here. All right, this is definitely a contrarian signal for the bulls being over 1. I did see a lot of put flow coming in today. I mean, it makes sense, counter trend rally, so they're probably putting out some hedge exposure. And now we're getting readings where, hey, this is saying this is probably going to snap back and the market wants to rally up a little bit more right here. I mean, if we're seeing 115, it's definitely go time. But anytime we get up into the 1 or 105, you can see here, boom, 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 boom. These are usually all times to be buying. So that is interesting. So 1 for the bulls there for the put call ratio. Take a quick peek at the skew. All right, they're starting to get a little bit more longer dated puts. Nothing crazy. Let's continue on here. Let's look at the oil volatility. Still elevated, obviously. We were watching this. I mean, really, as long as it stays over 72, there's really no issue. So oil probably will stay inflated for now. Let's see if it gets under that V2. Okay, let's take a look at, well, why don't we take a look at the yield curve? Haven't peeked in a while. And it's still just, it has inverted and it's just trying to re-invert. Nothing really going on here. We're waiting. This has been the longest uninversion. Usually it's 2 to 3 years after an uninversion. It can be 6 months, but that would be the most extreme situation. But usually it's a year, maybe 2 years of from the uninversion until we actually start seeing the recession. But as you guys know, we've been talking about that labor market. That's really the thing we've been watching for the shoe to drop, and we've not got any good data from the labor market recently. So the cracks are starting to appear there, and once the labor market starts to go, then I believe we'll see the full on real hit to the economy. And some people argue we're already in a recession, but you'll really start to hear about it once the job market starts to really go, and which it is starting. So we'll watch that. Fed funds rate cooling off just a little bit and down at 3.6. Okay, what else do we have? Let's take a look at some volatility. Okay, VIX futures still in backwardation here, so still not over the zero line. Big institutions, hedge funds, they really don't want to allocate money here while we are in the backwardation. So until we get in contango back over zero, they're going to be a little bit more hesitant. So that is still a bearish note. Couldn't really hold over this 30 here. I think the most bullish thing for the VIX would have been holding over this 20 and 29 basically. And then we could have looked to see VIX come into 33, but couldn't hold, failing back down. Still, obviously bullish for VIX over 20 and over 19. So 24 can honestly just bounce right here tomorrow. That's possible. We still have 23.45 and 22.10 basically. So unless it can come all the way down, when we get under 22.10, I think then we can go ahead and look for the 20s and the 19s. But till then, it's still strong. The VVIX here got a nice reading, topping out at 139.5, coming down a little bit, but still above 105. So no real issues. We'll see if this doesn't want to pop back over 117.50 here, these highs, right? But if it doesn't, and this continues to come down, well, that would be good for the bulls. And the 1-day VIX having issues again at this 31 area. As you can see, boom, this is a little bit lower, but same issues here. And definitely overbought. This is cooled down, this is cooled down, and the regular VIX is cooled down a little bit. So I would say all these still look pretty constructive. They're not even overbought. This is the 1-day VIX, the only thing that really looks like it wants to cool off. But we might see a little bit more downside, a little bit more of a counter trend rally before seeing lower. Or we just collapse tomorrow. I'm not sure. Okay, why don't we take a look? Take a quick look at the transports. Oh, here's a nice bullish sign for the bulls. We're getting some divergence here on the transports, heading up. And we got the Dow back testing the 200. All right, danger area here. All these equal highs and the 200 on the daily. That's an issue, but this is pretty good. I like seeing this, and the transports actually have recaptured the 200, or actually didn't even get down to the 200. They held up pretty well, and now they're definitely showing divergence. So this is definitely a check for the bulls on some possible bullish divergence there with some Dow theory. All right, let's just take a quick look at RSP, see where we are on the equal weight for another view on breadth. Why don't we jump over and actually throw our moving averages on here just to see what we got. Whoop, okay. Gosh, when you got VWAP on there, it's great intraday, but on the daily it looks so ugly. All right, and here's our 20. So what is that? 193.70. RSP needs under that, but it's trying to break out of this downtrend. You know, this candle here that it formed on the daily, really not. That's not really what you want to see. As far as a daily candle close. Oh, didn't mean to do that. Sorry. But where is my trend line? Okay, here it is. I mean, you can say that it broke over, and we're over the 9 there. So that's improving a bit. I will say that. I'll give them that. So, but let's see if we can get over the 20. Yeah, we pretty much bounced at the 3-year VPOC at 187 was pretty much very close to the lows. So that 3-year VPOC holding up the market. Now we're back over the 20 here. And if you recall, in some of the previous videos, maybe 2 months ago, the MDY and the RSP were really actually showing overperformance versus the weighted market. And we were looking at that breadth and expansion. Now, obviously, eventually, it did follow the rest of the market and sell off. But if there was one place I'd be looking for potential strength, I'd be more interested in looking at RSP names or looking at names that aren't quite so common. You can look at what's allocated in the MDY as well for potential trade ideas, because let's take a look at the mags. Mag 7. Okay, she's trying. I'll give her that she's over the 9, but you can see the 200 is a ways away. So where the RSP 200 was, you know, right around here. So you can really see the difference in the structure. You know, obviously the Mag 7's huge, you know, largest weighted bunch of companies in the equal weighted SPY, in the regular SPY. So I think this is really illustrating, even though we are over the 9, stuck at the 20. Be careful here, though, trading in general, because what also could potentially happen is we just get squeezed and stuck between this 20 and 9, which could lead to some choppy price action. So that could be tricky, and pretty much that would, for lack of a better word, that would suck if we do get trapped in between the daily 9 and 20. But I think the main thing that we wanted to illustrate here was just how much weaker Microsoft, Nvidia, and the names we all know, Apple, Amazon, etc., are, how much weaker they are overall, with the 200 over up this high from price with the RSP underneath. Now I will say this is flat. Okay, so one thing would be a little bit more concerning if we saw this 200 start to slope a little bit. Well, then that's what is going to be definitely a bit more bearish overall. But just right now, it's kind of on a flat line, which I think is good. And momentum to that downside might be waning cool just a little bit. But remember, overall, still, this is a counter trend rally until proven otherwise. If you're going to be tracking the mags, if I was to throw out a level, well, just look at these just look at these equal lows right here. I think this is kind of the spot you want to take a look at if they can get the mags basically over 60, 59, 75, 60. That would be a much nicer sign for the Magnificent Seven and the heaviest weighted names in the Qs and SPY. So I think that's pretty much everything I wanted to go over for this update. I hope you guys enjoyed it. If you haven't already subscribed to the channel, please do so. It's free, it means a lot to me, and I really appreciate it. Other than that, remember, a prepared trader is a profitable trader, so trade your plan and plan your trades, and let's have a great couple of weeks. All right, we'll see you with the next update mid-month. Take care.